Today I'm going to share my analysis for the dollar index. The reason why we analyze the dollar index every Sunday night is we want to determine our weekly bias. I'm starting off in the quarterly chart. As per my previous videos, we started a new quarter, which is usually pretty significant. So you can see here that we had this quarterly fair value gap, which has pretty much been filled now. So the fact that we retraced from a very bullish dollar index to fill this fair value gap, and then we didn't violate it, we respected it, and then we propelled back off, is a very, very bullish sign. You'll see here that those equal lows on the quarterly chart, we swept those into the fair value gap, and then we closed above, which is known as the institutional order flow entry drill. So this is a powerful entry technique that ICT talks about a lot. Now, looking at this quarter's candle, you'll see that it opened here, which is the open of this body. We then retraced, going against our bullish bias, and now this retracement is usually expected for every single candle. It is essentially the Judas swing. In this case, it's the Judas swing of the quarter. And if you think about accumulation, manipulation, and distribution, this Judas swing is the accumulation. And people tend to get chopped up here because it's usually a consolidation and price is moving the wrong way. So whether we're on the daily chart and we're looking at the Judas swing of the day or the quarterly chart, we typically don't want to trade this Judas swing, and we wait for price to go back above the open in line with our daily bias or our quarterly bias in this case, and then we should ride that expansion all the way back up in line with our bias. So the quarterly chart tells us that we are still bullish. Now moving to the monthly chart, you'll see that price is fractal. So every analysis you do, regardless of the time frame of the candle, can be applied to all other candles. So now look at the monthly. We had a very similar situation where we had a monthly fair value gap. Price came down, filled that fair value gap, swept all of these equal lows into the fair value gap, giving us an institutional order flow entry drill, and now we are propelling higher again. Again, we're respecting fair value gaps, we're respecting bullish PDAs, so we expect the highs to be violated and we expect more bullish action on the dollar index. Now, if you have a look here, this may turn into a monthly order block, and we displaced away. And if the monthly candle closes without filling this imbalance, then we'll have our fair value gap also, which is a very bullish sign, right? When you have an order block followed by a fair value gap, that is high probability for continuing high prices. Here we are now digging into the monthly fair value gap. So though we can retrace at any point, given that we've seen monthly action below where we filled the bullish fair value gap, and then we had the institutional order flow entry drill, and we've had a market structure break of this high, I'm maintaining my bullish bias on the DXY, and ultimately I'm looking to sweep the monthly liquidity right at the top. So that's my draw on liquidity, at least on the monthly chart. Now zooming down to the weekly time frame, you'll see that after all these bullish weeks, we had this weekly retracement where we had a down close candle, and as per my earlier analysis, we had started the quarter, so we were expecting some kind of Judas swing, and that's exactly what we got. We got a bearish retracement on the weekly, which would have chopped up a lot of people who were expecting bullish action, but look, we just filled the fair value gap, and now the weekly is bullish again. So I'm looking for those highs to be violated and for us to continue bullish on the weekly now that we've completed that quarterly Judas swing. Now here's some pretty cool price action. So in a previous DXY video, when the dollar index was super bullish and we started a slight retracement, I did predict that the dollar index may retrace to this daily order block before we go higher, and that's exactly what we did. So we've respected this daily order block, and I'll splice in the video of my analysis from a week or two ago that spoke about this. I'm thinking maybe we'll find support at this order block down here, this daily order block. We already did wick into it. As you can see here, we gathered some more orders and came back up. So that's one potential point of support around equilibrium. Now you'll see very similar wording that I'm using across every time frame, and these are the keys, right? So look here, we have these lows that are swept into this order block. So liquidity is swept into an order block for somewhat institutional order flow entry drill, and the body of that big bullish candle closed above those lows. So instead of giving us a market structure break, we had a institutional order flow entry drill. So very powerful technique to understand. And once you understand this, you know which way price is going. And again, look, once we swept that liquidity into the order block, we displaced away. And look at this fair value gap, which should formally turn into a fair value gap on Monday when the market opens again. Now looking at Goldbach, so I like the 243 power of 3 for the DXY for higher time frame flows, and I like the 4 hour to analyze that chart. And as per previous videos, we had an algorithm 2 running. Here's the order block on the 4 hour in the order block GB level. So this is a big heads up that we were running some kind of 243 algorithm. Here's the fair value gap. So I'm just marking the fair value gap that's in that fair value gap zone. But that candle was quite a big candle because we also had a liquidity void, and it basically did exactly what we were supposed to do in a liquidity void. There was no retracement there until we got to the breaker block, and then we retraced back into the fair value gap. You'll see that the bodies are respecting the fair value gap level. This is classic algorithm 2 working when it comes to Goldbach. And there you go. And we terminated exactly where we were supposed to terminate, at the opposite order block. Price action since then, we retraced to equilibrium, as you can see, which is a common thing to do. We retraced to equilibrium twice. The second time, we swept the previous EQ. So we were taking out all those early long orders. And interestingly, we retraced into the mitigation block. Now, what does the mitigation GB level allow big players to do? Everyone who was on the wrong side of the market can then change their position. So everyone who was short prematurely, that's where they're allowed to come out and then either go flat or go flat and then go long. So it's very telling that we went into the mitigation block level, because it shows that the algorithm is working and price theory is also working. And now ICT talks about the mitigation block, I believe. And what it's used to do is allows the big players to get out of their positions when they're on the wrong side of the market. The only trouble with ICT was we didn't know where the mitigation block level was. We had to assume it after the fact. But with the Goldbach levels, we know where the mitigation block level is. So I know Hoppy does this a lot on lower time frames, but he's a wizard where if he's on the wrong side of the market, instead of taking a loss on the trade, he will wait for price to retrace to a mitigation level and then come out there. So this is a very clever way that he, if he's in a losing trade, he can then mitigate that loss and come to a break even and then maybe get on the right side of the market. Now, based on that analysis, we're obviously bullish on the DXY for next week. However, how do we use the economic calendar to ensure that we are in line with the bullish expansion of the dollar index? As I've said before, every candle has an element of a Judas swing, which is the initial wick, and we don't want to be trying to take longs when we have that retracement that's bearish and then we have that accumulation. So understanding the economic calendar and how the weekly templates play into that help us. So I'll show you how I set up the economic calendar. I use the one from forexfactory.com. That seems to be the most accurate. I always ensure that my time frame is in New York, so GMT -4. So my TradingView is in line with that, and also my economic calendar is, because you don't want to be making mistakes. Okay, once we've done that, I typically, for the cases of this, what I'll do is I'll take out currencies I don't trade. So I care about Euro, I care about GBP, and I care about USD. For the purposes of this, to make it a little bit easier to see, I will also take out no impact news. I like having this calendar here, because it's this folder here, because it shows you cases where you might have a bank holiday in the USD. And if you have a bank holiday, don't trade. It's not worth it. You're probably going to get a seek and destroy type accumulation. I'll also take away the orange calendar. It's important to understand the orange folders as well, but I just want to focus on the red just to make this analysis a little bit easier for you guys to see. And let's change it so that we are showing next week. Okay, so what do we know about every weekly calendar, every weekly candle? We have the bearish retracement because we're bullish. Then we have the expansion, and then at the end of the week, we'll have some kind of retracement for the wick again, right? So I am looking for my first case of where will the accumulation occur and where could the first expansion occur in line with the weekly expansion. So we have high impact news at the New York Open, right? So that tells me immediately that London is likely to accumulate or have a bearish retracement. So I'm not going to trade London on Monday. Ignoring GBP for now, let's just focus on the USD news. Tuesday also we have high impact news at the New York Open. So now we have a decision to make. Are we going to have our bullish expansion start on Monday at the New York Open, or is it going to be on Tuesday? Right, we don't know that yet. Right, it could be either or. Statistically, it normally happens on a Tuesday. However, we could have it on a Monday, considering what's happening in the world right now. Right, it's war is kicking off in the Middle East. We're in a risk-off environment, and when we're in a risk-off environment, people fled to the dollar. So I'm inclined to not have so much of a bearish retracement for USD. I think there'll be a minimal one, and then we'll start pumping on the dollar again. But I'm aware that the low of the week could happen for the New York Open on Monday or the New York Open on Tuesday. The way you kind of know when it's happened is Sunday 5 p.m. you mark out the weekly open price, the true weekly open price. And then as you see price retrace away from it and then come towards it again and displace past that weekly open, you are pretty sure that the Judas swing has occurred. So that's what I'll be looking for. Once we retrace away for it and go expand past the Sunday open price, the 5 p.m. price, I'm then prepared to take longs. Okay. In terms of reversal, there is no high impact USD news on Friday. Right, so we could either pump the whole week and have a very slight retracement, or when Powell speaks on Friday at noon, we may start a retracement for the opposite wick on the weekly candle. So how am I going to be trading this week? I'm not trading Monday morning. I'm not trading Monday London's open kill zone. I will looking at the Sunday open price. As soon as we displace past that Sunday open price, I am then looking for longs until Powell speaks. I will trade the morning session of Thursday, the London session, and then either this may be a retracement or Powell may be a retracement. I'm definitely not trading Friday. So I'm trading Tuesday, Wednesday, Thursday morning, and then I'm pretty much done. So what did we talk about today? We talked about the DXY. My analysis says we're going to be bullish for next week. And now we use the economic calendar to work out our weekly profile and where we want to be taking those bullish trades. As always, if you have any questions on Goldbach or ICT trading in general, feel free to leave it in the comments. If you still don't understand Goldbach and you haven't bought the book, just buy the book. It's a lot easier to read about it and study Hoppy's book than trying to piece bits together from the internet blind. For the guys who are on Hoppy's Discord, these videos make a lot of sense because then I'm giving you some more advanced knowledge on how to apply it. But for people who don't even know what Goldbach is, just buy the book. The link is below. I am also offering for a limited time a mentorship program on my golden bullet strategy. It's a 90-minute private call with me. It's a screen share, so we go over my strategy, and then you can ask me questions because it's live. I'm not sure how long I'll be offering this for because I'm getting pretty swamped with it, but that is an option. As always, if you have any suggestions for more content, leave a comment in the YouTube section below.
Remember, All I'm offering is the truth, nothing more.